The next little section is just talking about installment notes a little bit. We'll get into them later in the chapter too. But what it's talking about is the current portion. So what we look at with an installment note is, say, you know, like my car loan, right? I make a payment every month, say a $300 car payment every month, right? And then, you know, but next year I owe too, and the next year and the next year and however many years, right? So say it's a 5-year note, it's really a long-term debt, right? Because I owe that for 5 years. However, I'm paying on it in the current year too. So whatever portion I'm paying in the current year is a current liability, okay? So if I owe 12 payments of $300, 12 times 300, $3,600 is current debt, and the remainder that I owe would be classified as long-term debt. So that's all this is really talking about. So if we have any installment note, most likely on like equipment or vehicles or mortgages, you know, land, that sort of thing, anything like that, any portion that we're going to pay this year, we need to include as a current liability. And then anything that's due beyond this year is going to be the long-term liability, okay? And that just makes a difference when we get into the end of this semester, which seems far away now, I know, but it'll go quicker than you think, right? And we're doing like debt ratios and things like that. We look at our ability to pay off like our current debt. And so it's important to classify things that we're actually paying in the current year as current debt. That's kind of the purpose of this. Again, you know, just to make sure that we're reporting accurately. So anything due in the current year will be current liability, and then the remainder of it will be listed as long-term debt. So that's just something important to keep in mind. Now we're going to switch gears a little bit, or completely, I guess. We're still dealing with liabilities, but we're going to talk about payroll. Okay, so we're done with notes for now. After we deal with payroll, it'll probably be Thursday, I imagine, we'll get into installment notes. But let's talk about payroll. So that's something we've dealt with in college accounting, right? Paying employees. When we paid them, we debited like salaries or wages expense and credited cash. So we dealt with that. However, we didn't really get into all the fun stuff, all the taxes, okay? So we're going to look at just some very general payroll liability stuff. So in this class, we're just hitting on kind of understanding the journal entries and what the employer is responsible for and what the employee is responsible for. But payroll, there's like a lot of nuances and laws. I actually teach like a separate payroll accounting course. And so we won't go like full in depth, don't worry. We do in that class where we deal with like kind of like tax, you know, it's a whole separate class. But we just want to understand like the basic principles behind what's an employer responsible to pay to have employees, okay? So we're going to look at payroll. Payroll is a current liability because as employees work in the year, we pay them in the current year. So it's important to journalize payroll and understand payroll because payroll that we pay and the taxes we pay significantly affect our net income, okay? Because they're all expenses. Payroll is subject to federal and state regulations and laws, which again, you will not be required to learn all of those. And again, it's important to pay payroll timely and accurately. Otherwise, employees get upset, right? When you don't get paid. I've been there before. It's not fun. So yeah, they kind of rely upon that. So we're going to learn just a little bit about payroll. So we've used the term so far like salaries and wages like interchangeably, you know, in college accounting procedures. But from now on in this chapter, when we're talking about a salary, we're talking about like someone who gets like a monthly or yearly, you know, like you make $40,000 a year or $3,000 a month or whatnot. So salary is usually like managerial or administrative, where you're getting an actual annual income amount. And then wages, we're going to use the term wages and wages expense when we're dealing with hourly employees. Okay, so we have salary and then hourly employees. Okay. We're not going to deal too much with all the other fun stuff, but you know, salaries or wages can also include bonuses, commissions, profit sharing, cost of living, all that other stuff. Again, we won't deal with that. It's just kind of important to know that it impacts wages and salaries. Again, we're not going to go too in-depth in most of this, but you've probably heard of the Fair Labor Standards Act. It's like a federal law that requires if employees are hourly employees, we must pay them for any work beyond 40 hours a week. So we pay overtime. So the rate of 1.5 times the regular rate. Okay. So we have to do that only on hourly employees. Okay. So here they're just showing us kind of how to calculate overtime pay. Again, we have what John T. McGrath is a salesperson. His regular rate is $34 per hour. Any hours worked in excess of 40 hours per week are paid at 1.5 times the regular rate. McGrath worked 42 hours for the week, ended December 27th. So to calculate his total earnings or what we owe him, well, he worked 40 hours at his standard $34, so $1,360. And then in overtime, we're going to take 34 times 1.5 to get like an overtime rate and multiply that by 2 hours. So he basically, his overtime rate is $51 an hour, and he worked 2 hours of overtime, so that's an additional $102. So his total earnings are $1,462. So again, that's just some very basic stuff dealing with overtime and how to calculate it. You won't be responsible for that on the test or anything. It's just kind of good to understand where they're getting those calculations. But let's get into the fun stuff, all the journal entries. I say fun, right? So there's 2 types of journal entries that we deal with when we deal with payroll. The first one is actually paying the employees, their actual pay, okay? So we know we're going to look at the term gross pay first. So gross pay is what the employee makes before we take out any taxes and any deductions. That's what we don't see, right? So gross pay is what we make, like your annual salary or your hourly rate, before any deductions are taken out, okay? Net pay is how much we're actually cutting a check to them for. So the net pay is what the employee actually sees in their pocket or in their bank account. So we always have to take the gross pay. It's the employer's responsibility to withhold federal income tax, here in Oklahoma, state income tax, Social Security, Medicare, you know, all that stuff you guys see coming out of your paychecks, right? The employer withholds all of those from them. So they take gross pay minus all of those deductions to get to a net pay. So it's the employer's responsibility. They have to withhold federal income tax, and if state income tax is withheld, and also local. We don't have local income tax, but if we did. And then there's like usually some optional deductions too. Medical insurance, maybe contributions to charity. There could be withholdings like garnishments that are required, things like that. Pension contributions like a 401k or 403b. So all of these things the employer is withholding. That's just showing you a W-4. We don't need to go through that. So again, the employer has to withhold federal and state income tax. They also have to withhold Social Security and Medicare tax. So we have what's called FICA, or Federal Insurance Contributions Act, FICA for short, requires that each employer withhold FICA Social Security and FICA Medicare. You know, and that goes into a government program. The employer withholds it, and then they pay it to the government at a later date. So, of course, Social Security is paying into the Social Security department, which, you know, provides retirement money, money for disabled employees and survivors. And then Medicare is, of course, the health insurance for senior citizens. So every employee in the United States pays into FICA, Social Security, and FICA Medicare. Like I said, if you get a paycheck, you see this coming out, right? And you're like, dang it. No. Hopefully we'll all see a return on our Social Security, right? So we won't get into that. They're just showing you a flat rate here for how to calculate Social Security and Medicare. These are just using flat rates, 6% for Social Security on all earnings, and Medicare 1.5%, sorry. Those are not accurate, up-to-date rates. They're just making it easy for calculations in this book. Again, taking a payroll class, you would learn that Social Security is actually like 6.2% and Medicare is 1.45% right now. But according to this chapter, they're just going to simplify it. So on that John T. McGrath, who had earnings of $14.62, that was his gross earnings, we would then take 6% of that to calculate how much Social Security tax he would owe, which is $87.72, and 1.5% to get a Medicare tax of $21.93. They added them together to get his total FICA, which is both Social Security and Medicare, of $109.65. Okay. So what does that mean to us? Well, in a minute, we're going to look at all the journal entries to show this. Again, other deductions depends on the employee. It depends on whether the employee is full-time or part-time, you know, whether they have voluntary deductions, like I said, like for a 401k, charitable contributions, life insurance. There's so many other deductions that you can have, like I said, garnishments if you owe like child support or back taxes or something like that. But these are the common ones, like, you know, there's cafeteria plans where you can like have extra things taken out for like child care and stuff like that. But we won't go into all of that. We would spend all day talking about that, and you don't need to know. So again, our main goal is to take their gross pay, take out all the deductions from their paycheck, and get to a net pay or take-home pay. Okay. So in this case, we have John McGrath authorized weekly deductions of $20 for retirement savings and $5 for United Fund contribution. We're going to assume a $257.95 federal income tax is withheld, and then they're showing us how we get to his net pay. Again, in this class, they're going to give you either the federal income tax withheld or tell you the rate to calculate it at. You won't have to calculate that. That's using tables that you don't want to use right now. Trust me, nobody likes calculating federal withholding very much. Because you have to, yeah, we won't do it. So they're going to give you most of this. It's just, I want you to understand where these deductions are coming from. So again, they calculated Social Security tax on a previous slide at 6%, Medicare at 1.5%. They told us the federal income tax, and they would tell you if there was a state, like 3%, 4%, something like that. They told us $20 to retirement and $5 to United. So we took his gross earnings and we subtract out all these deductions to get a net pay of $1,069.40. That's the check we're going to write to John T. McGrath, and that's going to be deposited in his bank account. That's his net take-home pay. Okay. So, why did they not go over the? Okay, I guess we'll go over this first. That's from the wages. So that was just the expense associated with payroll, okay? And we'll look at how to journalize that here in a minute. On top of that, so we have the one journal entry to deal with net pay, gross pay, all the deductions. Our second journal entry we're going to learn is the employee payroll taxes, okay? So the payroll taxes. So these are things the employer is paying just to have employees, okay? So the employer is going to pay FICA, both Medicare and Social Security, the same rate on every employee, okay? So the employer is also paying FICA on every employee. The employer is also responsible to pay federal and state unemployment. So as an employee, you do not pay into unemployment, okay? The employer is responsible for paying both state and federal unemployment. At the state level is where we actually handle unemployment claims. So the state unemployment department is responsible for paying out unemployment to individuals that qualify. Federal unemployment department is really just the federal department that oversees all the states. They set regulations and govern it and all of that. So most of unemployment goes to the state level, okay? So the employer is going to pay FICA tax, federal and state, also known as FUTA and SUTA, on every employee. Fun stuff, right?
Oh, yeah.
So this little chart just breaks down the difference between what we withhold on the employee side and the employer side. So again, the employee, we're going to, just from a government standpoint, withhold Social Security, Medicare, and federal tax. And then the employer is also paying Social Security, Medicare, and then federal and state unemployment. So at the end of each payroll period, and this depends on the business, right? They could pay weekly, bi-weekly, monthly, semi-monthly, monthly, you know, all of that. They're going to record their payroll liabilities when they run payroll, okay? So it's a lot of data. I know it gets a little overwhelming, but we'll break it down and look at it. Excuse me. So here's the following data for McDermott Supply for the payroll period ending March 21st. So we have two types of payroll. We have sales salaries of $20,000 and office salaries of $5,000. So total payroll is $25,000. That's wages, like gross pay. And then it tells us how much of that is subject to Social Security and Medicare, as well as state and federal unemployment tax. The reason less salaries are subject to state and federal is we only pay state and federal unemployment on the first $7,000 of each employee's earnings. So the employer only pays unemployment on the first $7,000 of each employee.
So okay. That's not saying how much it is, just how much is subject to it. So all of the Social Security and Medicare.
Yes, you got it exactly right. Yeah, our total payroll, the whole $25,000, we're going to tax for Social Security and Medicare.
Everything, yeah.
Mm-hmm. But then for unemployment, it's only $10,000. And so that's based on, again, they're just giving us that. But normally we would look at, well, how many have reached that 7,000, and it gets kind of murky after that. But yeah, you got it. So that's just the salary subject to payroll taxes. And then they give us the rates. Like I said, as you noticed, state unemployment, or as I said earlier, gets most of the unemployment tax, 5.4%, and federal gets 0.8%. Okay, the total tax for unemployment is 6.2%, but 5.4% goes to state and 0.8% goes to federal. As long as we're paying state, we get that credit for federal. Again, we won't go into specific unemployment. Just know you'll just use the rates they gave you and the salary subject to that to calculate that. There's a lot more with unemployment with all of this. Again, we're going to assume a 6% tax for Social Security, 1.5% for Medicare, and then they give us employee deductions. We withheld $2,000 for federal income tax, $550 for state, $1,200 for retirement, and $250 for charitable. So this is all the information we need to make our 2 payroll journal entries. Okay. So our first journal entry is dealing with the actual payroll expense itself. So important things to know. On our first journal entry, we're doing just the payroll. We always debit the gross pay. So gross pay is always debited to salaries expense or wages expense, depending on what it is. In this case, they were both salaries. So we have sales salaries expense, $20,000 debit, office salaries expense, $5,000 debit. So those debits are gross pay, and those were given. These credits, all the way down to salaries payable, that one's different, but all these others are deductions that we're taking out of our employees' paychecks, okay? Notice they're all payable accounts. They're all liabilities. These are all current liabilities. What we do is we take and tax, calculate our Social Security tax, $25,000 times the 6% rate that they gave us, and that's $1,500. Okay, we put that in a payable account because we collect it, and then we're responsible for sending it to the Social Security office. Okay, so that's what we're doing here. Medicare tax payable, $25,000 times 1.5%. We get that amount. Federal income tax payable, state income tax payable, both of those were given. Retirement and charitable contributions. So all of those we withhold from our employees' paychecks. So those are credits to a current liability account, a payable account. Okay, so it's always payable accounts. They're always credits. And then last but not least, we take our gross pay of $25,000 and we subtract out all of these payments, all these payable accounts. Salaries payable is $19,025. So we took $25,000 minus all of these deductions. That's our net pay. The $19,025 is the net pay. This is for more than one employee, you know, but they're showing you the full net pay. So that's how much we're going to cut in paychecks to our employees. So salaries expense debits our gross pay. We have credits for all of our deductions. And then gross pay minus deductions equals our net pay, which is a credit to salaries or wages payable. Any questions on that one? It's very long, right?
Makes sense.
Yeah, it makes sense when you break it down. You just have to like break it down. And I know it's a little long, so I say it's a little tedious. But it's not too bad. You're just doing a lot of calculations. And like I said, some of it they give you. Let's go to our practice and do one like this. So before we move on, I think we need a practice break, right? So number 3 on our practice is journalizing payroll. So again, our first journal entry dealing with payroll is journalizing the actual payroll that we're cutting checks for. So it says payroll register of Heritage Company indicates $3,900 of Social Security and $975 of Medicare, withheld on total salaries of $65,000 for the period. So see there, we're not even making us calculate, which is always nice. Federal withholding for the period totaled $14,250. Retirement was $2,600. So in this case, we don't have, a ton of deductions. But again, I always start with a debit for my gross pay. How much is the gross pay? Yeah, exactly. It's the amount before any deductions. So it's just the total salary of $65,000. Very good. So my gross pay is before deductions, an expense of $65,000. So that's the total expense to the employee, the employer. Okay. Then I'm just going to credit my withholdings or deductions. So I should have Social Security tax payable. Make sure you choose the payable account. And they gave that to us. It was $3,900. $3,900 to Social Security tax payable. Then we had Medicare tax payable, $975. Medicare tax payable, $975. We have employee federal income tax payable. Federal income tax payable, which they told us was $14,250. $14,250. And then we have retirement savings. So retirement savings deductions payable, $2,600. $2,600. So that was all my deductions. So what's the net pay for this payroll period? Very good. $43,275. And that's going to be a credit to salaries payable. Okay. So we took our gross pay minus all of our deductions to get salaries payable credit $43,275. So this journal entry calculates how much we owe to the employees. We would have the next journal entry would actually just be a debit to salaries payable and a credit to cash to actually pay those when we cut the checks, just to kind of finish it off. So we put it in a payable account when we calculate it, and then when we cut the checks, sometimes we do the journal entries and then cut the checks the next day or something like that, or someone else cuts them. Okay, so salaries payable is the net pay. Any questions on that? And again, sometimes they'll give you percentages and you have to calculate some of these withholdings, but this case they gave them to us, which is always nice, right? Okay. Okay, so that was to record the payroll expense. Again, we have a second journal entry where we have to record the employer payroll tax. So again, the employer has to pay FICA, Medicare, FICA, Social Security, both state and federal unemployment. Okay. So, and they gave us all of this information. So based on the example we were looking at, we had $25,000 worth of wages subject to Social Security and Medicare. So Social Security is $1,500, Medicare is $375. State unemployment, we had 10,000 taxable wages under state and federal unemployment, 5.4%. So state unemployment is $540, and federal unemployment is $80. So we add all those up, and it costs the employer an additional $2,495 in this period just to have these employees that they're paying. So you can see the total cost of having an employee, you have to calculate the wages you're paying them plus the taxes we have to pay. So to journalize payroll taxes, well, we added up the total payroll tax, $2,495. That gets debited to payroll tax expense. So payroll tax expense gets debited, and then we just credit each payable account, just like we did on the last example. So Social Security tax payable, $1,500, Medicare, $375, state unemployment, $540, federal, $80. Okay. So that's our payroll tax expense. So there's always two journal entries. We have to recognize the wages that we're paying and then the taxes associated with having those employees. These are the only four you'll ever see in the payroll tax. The employer pays FICA, Social Security, and Medicare, state and federal unemployment. So it should always look pretty similar to this. It may be, it should be payroll tax expense and these four payables. So this one's pretty easy as long as you just, remember that. That's always your journal entry. Okay. So let's do the example on that one and then we'll stop for the day. So I'm going to go to number 4. And we're dealing with the same one as the one we were dealing with the payroll. So Heritage Company, we have 39 Social Security, 975 Medicare, total salary $65,000. And then it tells us earnings of $10,000 are subject to state and federal unemployment at the rate of 0.8 for federal and 5.4 for state. So we want to do our payroll tax expense. So I always debit payroll tax expense to start with, but do we know the full amount yet?
No, we gotta add all those up.
Yeah, we got to add them all up. So we don't know it yet. So I'm just going to leave that first line blank. But they give us, right, we have Social Security tax payable. That's still the $3,900. The employee, it's withheld from the employee, and the employer is responsible for it. And same with Medicare. Medicare tax payable was $975. Then I need to do my unemployment. So I have state unemployment tax payable. How much is the state unemployment tax payable?
0.4% times 10,000.
Very good. Yeah, they told us that 10,000 of our earnings are subject to unemployment. So we take 10,000 times 5.4. So $540. And then we have our federal unemployment, which is still based on that 10,000 at a rate of 0.8%. So it's just $80. So on this one, I need to calculate all my withholdings, all my credits. So what's my payroll tax expense?
$5,495.
Very good. $5,495. $5,495. Any questions on that? Okay. So again, it's just important to remember you have the employee payroll that you're journalizing, and then the employer payroll tax. Okay? Your employer payroll tax should always look like this. Your numbers will just change. Okay. All right, well, I think that's a good stopping point. On Thursday, we'll cover the last little bit of payroll, and we'll talk about installment notes. And have a great night.